I'm just going to spend a few minutes talking about basically giving some color commentary regarding what Anat was just talking about with her statistics. Can everybody in the back hear me, by the way? All right, good. So if you'll forgive me, I think what I'll do is I'll weave in a bit of my own personal story just to give you some sense of my own personal experience with the Israeli capital markets, which goes back 35 years. And in fact, it even goes back a little bit earlier than that. The first time I visited Israel was the summer of 1984 on a teen tour. Now, I don't know how many of you remember that period of time. I know we have some Israelis here. I've met some quite young ones. So those of you who were around in 1984 probably remember that the inflation rate in Israel was hitting 500%. That was my first introduction to the Israeli economy. 500% inflation. And as a young 17-year-old, it was shocking to me to see prices change 4 or 5 times a day. And by the time I left Israel at the end of the summer, the shekel had fallen by 50% relative to the US dollar. That, of course, sparked some serious interest for me in economics as a subject, and international economics, and Israeli economics. So I returned to Israel 3 years later to study at the University of Tel Aviv. And I made it my business to do a deep dive into the history and structure and evolution of the Israeli economy. And I was stunned when I arrived in 1987 to discover that in the intervening 3 years, Israel had changed its currency. It's still called the new Israel shekel, shekel chadash, today, 40 years later. And the inflation rate was already on its way down to, it was low double digits on its way to where it is now, close to 0. What happened? What happened to Israel in 1984, and what had happened in that 3-year period of time? Well, I don't want to go into the whole history because I'm going to give it a short shrift, and that's what this paper that the Consul General mentioned. It's the history of everything I'm about to talk about tonight. But suffice it to say, the Israeli banks, the big 3 banks in Israel, Bank HaPoalim, Bank Leumi, and Israel Discount Bank, had perpetrated a Ponzi scheme on the Israeli public through the stock exchange, through the Tel Aviv Stock Exchange. It was an inflation era. I won't go into the details of what that Ponzi scheme was. They felt that they had to do it in order to survive. But in 1983, all the banks in Israel failed. There were 7 banks, still mostly 7 banks. All 7 failed. All 7 were nationalized by the Israeli government at that time. Imagine, they closed the Tel Aviv Stock Exchange for 18 days. You think about the September 11th in this country. We closed the stock exchange for a little bit less than a week. When I arrived back in Israel in 1987 and began to learn the history of what was originally a socialist economy that was very successful in the 1950s, the 1960s, but in the 1970s began its slide, and by the 1980s had totally collapsed. That socialist economy collapsed in a ball of inflation, bankruptcy, and nationalization of the entire financial system. How did we get from there to what Anat just told us? That history, that trajectory of reform and restructuring is still in process today. That is the strategy that we follow. We don't follow startups. We don't get involved in venture capital. What we care about is the ongoing reform and restructuring of the Israeli economy, financial system, and capital markets. Starting in the 80s, Shimon Peres, Yitzhak Shamir formed the first rotation government, right? We have a rotation government now. That was a successful, it depends on your political ideology, but it was a successful rotation government in the sense that they rotated. But what else did they do? They implemented the Economic Stabilization Plan, which set in motion the transformation of socialist Israel to capitalist Israel. Now, what happened was, in the socialist era, Israel was entirely monopolized by companies that were either owned by the state itself or by the largest labor union, the Histadrut. And in the 90s, the government led the way and forced the privatization of the entire Israeli economy. In the 1990s, all of the major brand names that are still familiar in Israel were sold to private investors or through the stock exchange. But what it really happened was those monopolistic enterprises were just transferred into private hands. The monopolistic structure of the Israeli economy remained. And so starting in the 1990s, a phenomenon, a tycoon phenomenon, Israel had its version of the oligarchs that you found in Eastern Europe. But there's a big difference between an oligarch and a tycoon. An oligarch has political power and economic power. A tycoon in Israel had economic power, but they never acquired the same degree of political power. Keep that in the back of your mind for just 1 minute. When Israel privatized the monopolies, they put these monopolies in the hands of a very small group of people that used these monopolies to build large business empires. And these people became very famous in Israel. Israelis, who are the Israelis in the room? Okay, name them.
Royale.
Oh, no, who are the... Oh, no, okay. Dankner, Tshuva, exactly. These are the tycoons that took over through pyramidal schemes all of Israeli big business. Now, some elements of these companies began to trade on the stock exchange, usually small minority interests. Corporate governance in Israel in the 1990s and the early 2000s, during the initial era of privatization, was very poor. The Bank of Israel, for example, was not an independent central bank like the Federal Reserve through most of its history. That began to change only in the 1990s and the early 2000s. The Israel Securities Authority that Anat now heads was very weak. And in fact, in the 80s, was mostly complicit with. It didn't even have the legal power of an authority in Israel, which is a higher legal standing than other types of agencies. So, starting in the 1990s, privatization did transform Israel to a capitalist country, but it did not transform Israel to a competitive capitalist country, which is why prices are high in Israel. It's why the cost of living was so high. Starting in 2005, however, and I'm going to date it as of 2005, the next era in Israeli economic history began. And that was the beginning of the transition from monopolized capitalism to competitive capitalism. And Israel has enacted a series of reforms starting in 2005, and every few years, the Israeli government has doubled and tripled down on the transition towards the free market. And Israel today is going through its Teddy Roosevelt moment. If you think about American history, the trust-busting era in the 20th century in the United States, that's where Israel is now. What happened in 2005? The government set up a commission called the 'Bahar' Commission. Even most Israelis aren't even familiar with the 'Bahar' Commission, I don't think. Any Israelis familiar? Who was Yossi Bachar?
I was part of it.
Oh, there we go. So what did the Bachar Commission do? If you remember.
It did a whole bunch of things, but the assets that were in the hands of the banks, well, it basically went to private institutional values instead of the few banks. So
there you go.
Better competition in the market.
Before 2005, Bank Hapoalim, Bank Leumi, and Israel Discount Bank controlled 80% of all deposits in the country, 80% of all lending in the country. They controlled almost 100% of all securities underwriting. They controlled the entire pension management industry. When the Donkners and the Arisons and the various tycoon families took over these financial institutions, they were able to use them as their private piggy banks to take over all of Israeli large-scale industry, because these banks controlled all financial resources in the country. In 2005, the Israeli government woke up and said, we have to end this. And they passed a sweeping financial reform where they broke up various aspects of this system. So first, they forced the big banks to divest all pension management. Let me tell you how important that reform is. The pension plans in Israel are, think about a 401k here in the United States, right? Except it's mandatory and close to 25% of income. Meaning every worker in Israel has a mandatory obligation to contribute a massive portion of their salary into the pension plan. Capital accumulates in that pension system at an incredibly rapid pace. Israel has the highest savings rate in the developed world. Much of that reform, much of that process began with the Bachar Committee reform in 2005. Am I getting it right?
Yes.
Then they told the big three that they had to limit their underwriting and capital markets activity, and the investment banking industry was born in Israel. In fact, Anat just showed us a chart of this big boom over the last 2 years in capital markets activity. What you might not have been able to see in the small print was most of it, there was a boom also in stock underwriting, but most of it was corporate bonds and government bonds. Because in the Bachar Committee, when the banks were removed from the capital markets, think about it, it opened up an opportunity for companies in Israel to raise capital by issuing bonds instead of getting a loan from a bank. It was the beginning of competition in all of finance in Israel. And the corporate bond market in particular took off like a rocket. Much more so than the stock market. We'll talk about that in a minute. But the corporate bond market exploded in Israel because for the first time, companies could obtain reasonably priced capital without having to beg at the banks that were controlled by a handful of tycoons. Right? That's the Bachar Committee. That's when I first started thinking about setting up my fund. Not only that, around that time, the Knesset significantly strengthened the enforcement powers of the Israel Securities Authority. Finally, there were some real teeth in the regulatory system in Israel. They strengthened the disclosure and reporting requirements and basically brought them up to United States standards. And Ophir, I know you just came in yesterday. Am I getting this story relatively right? Okay. I've been investing in Israeli companies since 1987, when I first discovered this whole scenario of this backwater of a market with incredibly interesting companies and stories. But it wasn't until 2005 that I trusted what they said. That they finally had real auditing standards you could rely on, with global auditors that you could sue if you had to, through mechanisms that we're familiar with, like in the United States. 2005, that era around the Bachar Committee was really the beginning of Israel joining the first world from a capital markets point of view. That's when I started thinking about setting up a fund. I've been investing in these markets for decades. And now it was finally, you didn't have to call the cousin of a board member in order to understand whether the reporting actually meant anything or not. Then the financial crisis came along. The financial crisis was an incredible benefit to Israel in the long run. Why? Many of the tycoons made unbelievably stupid real estate investments in the United States, in Europe, and they were leveraged to the hilt, and they were teetering on the verge of bankruptcy. And to Israel's credit, and the Israel's before and not, there was a guy named Shmuel Hauser, who was I think he wasn't he right before?
Yeah, he was the chairman.
Who was a tough MF. And he, when he saw, and obviously it wasn't just him, but the entire government and regulatory authorities in Israel understood that the tycoons had been significantly weakened by the financial crisis. And in order to save their empires, many of them, some of the worst case offenders, resorted to outright stock manipulation in order to preserve their empires. And the Israel Securities Authority, using its new legal powers, went to work. And it's very nice that she gave this promotional presentation, but I want you to know, as an investor, what I would have liked even more than what she said was all of the case studies that actually happened where they went after the big tycoons and forced them to at least begin the process of unraveling their business empires. Then in 2010, there were 2010, 2011. So in 2010, now Netanyahu is the prime minister. He sets up something that's called, in shorthand, the Concentration Committee. The Concentration Committee, the entire idea was, let's break up these monopolies. But it didn't get any life. It wasn't taking off. The Knesset wasn't taking it up. But in 2011, if you remember, there was the so-called Arab Spring. And in Israel, they had their own version of the Arab Spring. In Israel, they called it the Cottage Cheese Rebellion, if you guys remember those large-scale street protests. A lot of Israelis, if you ask them, they'll tell you nothing came of that. Not true, because it breathed tremendous life into the Concentration Committee, which led to probably the most sweeping legislation in Israel's economic and financial history. Even bigger than what I just said about the Bahar Committee, no offense to somebody who was on that committee. Were you on the Deconcentration Committee too? Okay. Are you familiar with that also? Okay, good. By the way, when I talk to Israelis, very few actually are aware of this wonky minutia about how these things happen.
Well, we work for the Israel Security
There you go.
So if not us,
And if not you, then who? Exactly. So the Deconcentration Committee was really the beginning of what I just said a minute ago, the Teddy Roosevelt moment in Israeli history. It forced two major things. Number one, you could no longer own a financial and a non-financial company under common ownership. Just so you know how important this law is, I just told you that these tycoons bought, for example, the Arison family. Who were they? They Carnival Cruise Lines. They used their money. First, they bought Bank Hapoalim. I'm going to do the shorthand version of the story. And then, guess what? They bought Shikun V'Benui. They actually bought it in reverse order, but imagine the country's largest lender and the country's largest borrower owned by the exact same people. It makes no sense. It's the very same law that the United States passed in the 1920s. Walmart applies every year to become a bank, and every year the Federal Reserve says no. We have the exact same law in the United States, and we've had the law for 100 years. It prevents the monopolization of American industry and the competition that's embedded in the American economy. Israel has had that very same system only since 2013. 2013 is when the concentration law went into effect, and Israeli companies had until the end of 2019 to divest themselves and choose. Are you a financial company? Or are you a non-financial company? Most of them complied, those that didn't have extensions. From 2013 to 2019, the tycoon phenomenon did not end, but it was dealt a very significant blow. And it is on its way to ending. And in that period of time, the entire financial system went from concentrated ownership to widely held ownership, completely separate from the industrial structure of the Israeli economy. Since 2013 and the concentration law, the Israeli government has doubled and tripled and quadrupled down on pro-competitive legislation. I won't go through all of it. I'll just use two small examples and then end with why this is good for Israeli capital markets and us as investors. I'll give you an example. I just mentioned to you the Bukhara Committee. Yes, that broke up capital markets, pension management, and corporate lending. But the banks, the big banks, still have a lockhold over traditional commercial lending. 2017, the government set up another committee called the Sturm Committee. And are you familiar with that one too? There we go. I got the best audience I could possibly have for this. What's that?
You got 3 out of 3.
Yeah. The Sturm Committee said, guess what? The two big banks control all credit card activity in this country. Let's force them to spin out the credit cards, which happened. Then those credit card companies not only will be competitive on their own as what we call monoline credit card companies, they can set up over the course of time, if they so choose, in 2 more banks. If they do, then at some point we'll let these incumbents back into the credit card business. That happened in between 2017 and 2019. They did that. They've completely transformed the payment system in Israel. In fact, there's other elements of the payment system they forced to spin out. Israel is likely to shift from a 1950s payment and credit system, which I don't mean to be insulting, but that's where it is now. But it's going to make some quantum leaps in the coming decade and jump very rapidly, I would argue, into a 21st century payment and credit system. Okay, nothing but doubling and tripling down reforms. The most recent government passed something called an Economic Arrangements Law. In 1985, I told you that we had this rotation government. And as an emergency measure, they established a streamlined legislative process called an economic arrangements process. What does that mean? They needed to, in order to get the economy on a good footing, they knew they had to get some seriously controversial legislation passed to shift from this socialist past to this more free market future. So they said, you know what? Everything of an economic nature, we're going to send straight to the Finance Committee, and we're not going to let everybody in the Knesset have a say. And that was meant to be a one-time only, streamlined emergency procedure. And there has been an economic arrangements package in every single budget since 1985. And every single one of those has been a pro-market reform, with the exception of the last 3 years when there was no budget, because of all the various elections. But so as a result, there was a lot of unfinished business that was bundled into the most recent government's budget, which they finally passed. The last example I'm going to leave you with is Israel just passed a major overhaul of its import laws, which I don't really hear much discussion about. There's some in the Israeli press that is going to throw wide open competition in a wide variety of consumer products. It opens up foreign imports into the Israeli economy and will push down consumer prices in a major way. But what else will it do? How did Walmart become Walmart? How did Target become Target? They bought inexpensive imports in large quantity and expanded the footprint of their retail stores, or used it to create tremendously large distribution networks online. That's happening in Israel right now. Some of our top performing stocks in our fund have nothing to do with artificial intelligence. No offense, David, I apologize. Nothing to do with fancy technology. It has to do with simple economics. That if you can expand your footprint as a retailer, and you can bring in lower quality, lower priced inventory, and you get your sales per square meter up and your cost per square meter down, your margin goes up, which is why some of the best performing stocks over this 12-year period that are not just had in a chart are not high tech, they're retailers. That's the top performing sector in the Israeli market. Fox, which anybody who's been in Israel, that's one of the best performing stocks in the world. It has nothing to do with fancy startup capital and technology. It has to do with basic economics 101. That is the strategy that we follow in our fund. It's why we're leaving our performance information for you here. When we look at the last 12 years, and Anat showed a very nice chart that the Tel Aviv 125 is the best performing stock market in the world, which is true with the one major exception, the United States. But it's better than all the other world markets, that's for sure. Since 2010, when we launched our fund, we have averaged 17.4% per year. Why? Because of this story I just told you. It has to do with the restructuring of the Israeli economy, the increasing competition of Israeli business, the greater capital and liquidity that's flowing into their markets, causing multiples to gradually rise. That is tachlis. That is not fancy startups that may or may not succeed. I have nothing against startups, only I don't invest in them. We want mature companies, real balance sheets, real cash flows, real earnings, solid growth. There's 541 companies traded on the Tel Aviv Stock Exchange, as she just said, and almost another 100 traded on world markets, most of them in the United States. When we launched this fund on August 1st of 2010, the total capitalization of the Israeli markets, both in Israel and in the United States and around the world, was $150 billion. As of December 31st, 2021, it was $475 billion. Anat is right. Why is it that we are the only actively managed fund focused on Israel in the United States? Why is that? It's a shanda. So, but as long as we are, by the way, there are 3 other index funds. So I don't want to say we're the only fund, but we're the only one where I am the portfolio manager. There should be hundreds of them. Well, I should say not only I, but a human being. But there's 4 total funds, 3 index funds and us. It's a shanda. I welcome all of you to either invest with us or start your own funds, because you're leaving tremendous money on the table. Thank you for your time.